And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, May 18th, 2020. The market basically traded inside most of the day, except for the final 2 hours, and where it just really picked up steam and started to head lower. So let's take a quick review of what our possibilities are from here. I've added a B here to show that, remember, we're in an intermediate fourth wave correction, and which we had labeled this as the first leg of that correction, which would be labeled wave A. And then we had this, which could be labeled all of B. And this is where it can get a little sticky and where we have to now make some allowances. This could be the start of the C wave, could be 1, 2, and then boom, we're off on the third. That all fits. Or if it stops here and starts to rally back, then that's a possibility that this is wave A of 4, but this is wave A of B, and this is wave B of B, and we still have a C wave up. Now, that may be the case. And if it is, then I'm just going to put some Fibonacci's on there that will suggest that. But first, let's go to how we're labeling it right now, and that we're going to run the possibility this indeed is that C wave down. So what we want to do now is we want to look at the Fibonacci extensions for that type of a move. And what we do is wave C would be in relationship with wave A. And so what are those Fibonacci relationships between an A wave and a C wave? Well, the first is that that wave A, or the most common, is that wave C will equal wave A in length. And that comes in right here at 3,968. And the second most common is that wave C will equal 62% or 618% of wave A, and that's way up here at 4,048. And my expectations, and most time expectations for that C wave, excuse me, would be for it to break below and create a new low below A, which is a 4,029.25. So that one's not really in line yet. What comes up next is going to be down here, 1.236. So that wave C would be 1.236 times the length of wave A, or 1.382, which is going to be 1.382 times the length of wave A. And that is more equivalent. So that zone actually goes from 3,970, we'll call it, all the way down to 3,890, I'm going to call it, 87, 88 to 90. And that's a pretty big zone. It's about, 70, 80 points. So it's a big zone, but it leaves enough for where we now need to look at the structure as it's coming off. Indeed, if it is the C wave down, we need to be able to count 1, 2, 3, 4, 5. Once we're able to count those 5 waves, allowing for subdivisions, of course, and everything else in between, we would be looking to see where it ends up. If we're counting 5 and it's ending up right here, that's going to be likely where we're going to call it to be finished, and we'll be looking for the next wave up to begin. But if it continues, then we have additional zones. Now, one other thing that we can be adding in here, and I'm going to go up to the daily for this one, is we can add, indeed, and this would be that we're just going to look at, just because we want to, we're going to take a look at the Fibonacci retracements for an intermediate fourth wave, being that, look how extended and how long wave 3 was. So we're going to go from there, maybe. Come on, do it. There you go. Thank you ever so much. And now we want to go up to that high, which is right there. So now let's take it back down to our hourly chart, and let's take a peek if we have any groups coming together. And we do. And 236, which would be an absolute minimum for an intermediate fourth wave, comes right down here at this level, right? Now, what else do we have? We don't have anything else until way down at 3,733, but that would be at that's where 200%. So wave C would be 200% the length of wave A. Possible? Absolutely. That's why we have them. We have these Fibonacci levels, because this is where it would be. But we have this zone. So first zone is right here, all the way down to here. And we've got a larger Fibonacci that kind of comes within that. So basically you got 3,925, 3,000. So that zone is going to get more strength here, 3,925 down to 3,887. That's going to be stronger because we have a cluster of Fibonacci support levels for it. Absolute first, 3,968. And then we have a little bit of zone around that, because that does fulfill the requirement that it does put in a new low below the wave A, and then some. But these is going to be the number one strongest. This is going to be number two, and then the third is going to be down here, or all the way down here. So that's going to be our downside. Now, let me take the retracements off, pull this open a little bit more, and let's take a look at the possibility that this is just wave A of B, this is wave B of B, and now we're going to go take a fly high. We're going to go much higher. And what we want to do is I'm going to take off those extensions and put up some new extensions, which are going to reflect if this is wave A of B and this is wave B of B, where can it go? All right, so we're going to draw here, go up to the top, and then down to the, no, sorry, folks, I put up the wrong one. I want, come on, that one. All right, let's try that again. Go there, go up to there, and then come down to this low. And that's assuming that that low holds that we got this afternoon on the close. So if indeed it's going to turn and start to go higher, these are going to be our levels. Now, the most common, again, that the C wave up would be equal to the A wave. That's going to come in at 4,260. New high, quite possible. It's going to be what we would call an irregular B wave, where it goes up and creates a new high, or conversely, it could create a new low and then proceeds to do a C wave after that. And that's quite capable, but that's a lot of rally from here. And so it has to be something really positive coming into the market that's going to drive it that high. Otherwise, we have these levels. All that needs to do is wave C just really needs to come up and break that high before turning lower again. So in that case, we've got 4185. That's a 50%, 62% or 6.618% of that A wave comes at 4,203. That fits very cleanly because the most common is that C is equal A. The second most common, C is equal to 0.618 of A. Boom, right there, 4,203. That would fit. Still, it's going to take a lot of rally because we're actually almost 200, almost 100 points, 100 S&P points away from that. Is it possible? Of course. We've seen it happen. We've seen it happen in these declines where the market just really takes a tumble. I mean, today it was already down 43, and that was just up until the close. It was down actually a little bit more, about 45. So yeah, the moves are possible, and it's going to take a lot to get it up there, but it could do it, and maybe it takes a day or two. But my preferred right now that would be our alternate view. My preferred is going to continue that this C wave is the one that's in action. So this B gets left there. 1, 2, boom, we're in a third, and now we're heading down. And remember, as we have discussed previously, we constantly, I'm looking for the C wave here to resemble the A wave, not only in length, but just in terms of how it went down, because both would be 5-wave structures. So I'm looking for the second 5-wave structure to kind of resemble this one. And you can see these thirds really kicked butt. So if I'm going to get something similar, well, it's going to look 42.33, we'll call it, down to here, 41.03, that's 120 points. So 120 points from here is going to take us down to 40.50, right down into here. That would be pretty intense. It would be an intense drop. Could it do it? Absolutely. All it needs to do is add to today's decline that it did, and just, you know, by about 20 bucks, and we're there. So these things are all within the realm of possibility. And so now we can be prepared for them. Now I've already given the Fibonacci coming off and the levels where we think we can complete. And remember, to do that again, you're just going to take extensions, Fibonacci extensions, from up here at the top where wave A started, down to the completion point for wave A, up to the top of wave B. That then is going to give you your extensions down. The extensions up, we went from the bottom of wave A to the top of wave B, and then down here, or the top of that wave, and then down to the low of today. And then we've got our upside extensions. So my preferred remains for what we were already looking at, and that's going to be that from here to here to here. So you can see much different. And look at that, 618 comes right at 4,048. And what were we just talking? 4,050. So we already are in line for that move. And that just really kind of fits so cleanly to complete the third, get a little fourth, and then do another fifth down. So that's it for today. I wish everybody a very good trading day tomorrow. And the next update will be on Wednesday, the 19th.